Welcome to Top Trades. We've got a big day shaping up here in the market. We just had a very big bombshell of a report with CPI come out this morning, and it has turned markets around. Some of the constructive trades that we saw setting up in the last week or two have been demolished. And we've got our man on the scene, Greg Guenthner. Gunner, let's we might as well just get right into this. We'll dive in. One thing I wanted to welcome everyone. We've got some people on Zoom right now, but we finally, the tech wizards that we are, we're finally live on YouTube. So if for some reason you prefer YouTube, we've got some people watching the comments over there, but I'll be here watching the comments on Zoom. So you can always go ahead and find our Paradigm Profits channel there on YouTube. So Gunnar, let's kick it off. Big report this morning, tons of trades moving different ways and a bunch of takeaways. Give us your take. What are you seeing?
Well, CPI came in hot, and that's really all you need to know because the market has been just hanging on every single piece of inflation data that's come out. And we've talked about this before on other calls, but we'll talk about it again. The main reason that we're running into these little hiccups, maybe this is a bigger hiccup than a little hiccup, I'm not really sure. But one of the main reasons we're hitting this rough patch with the markets lately is because expectations for when the Fed is going to cut rates have changed dramatically over the past few weeks. Back in early January, it was almost a given that, like, yes, Powell and company are going to begin cutting rates back in March and or coming up in March. And then by the time a couple weeks passed, the markets got a little wobbly aside from some of the Mag 7s industrials and the semiconductors that were taking off. Those expectations changed to below 50%. So it was below a coin flip whether or not they would be cutting. And now it looks like we are going to be watching them kick the can, and we won't see the first cuts until June. And so the stocks that are really getting punished today, and yes, there's a ton of red out there on the screen, obviously, but the stocks that are really getting punished are the growth names, the high beta movers, these stocks that are so dependent on lower rates to get them moving in the right direction. Those are the trades that are taking it on the chin today. If you look, you'll see that the NASDAQ has been clawing off of those lows ever since about 9:30. It's only down about 1.25% right now. However, going down the cap scale, if you look at the stocks that were looking really good just yesterday and looked like they were going to break out, small caps, being the one that I was paying attention to, the Russell 2000 is down. It was down 3.5, almost 4% earlier. It's down still more than 3%. As we speak right now. Everybody is running back to the other side of the boat right now. Yesterday, people were buying mid caps, they were buying small caps, they were buying tech growth, they were buying all these stocks, and it looked like we might be getting a little bit of exhaustion in that huge parabolic semiconductor trend that we've enjoyed over the past few weeks. And today they're like, oh no, forget about all that. Inflation, CPI comes in a little bit hot, and now everybody's scared again about when the Fed's going to cut. And so they all piled back into the quote unquote safe stuff, the Mag 7s, the semiconductors and all that. And they're ditching all of the high beta, smaller trades, the growth trades out there. And so we're in kind of a merciless choppy environment. We'll look at some of those charts in a little bit, but that is where the hive mind of the market is at right now. And that's what's causing the angst out there today.
Yeah, and the one thing that I was sharing my screen on before was the March percentage of a rate cut, and now it's down to 8% chance. So that is basically like there will be no rate cut in March. And as Gunnar said, they're kicking it down the road. Like, what if it ends up, oh, it's not June, it's August. Oh no, it's November. Like that could happen, and that would be that would throw the market in all sorts of different directions. What else is shaping up? Do you want to share your screen? And just show some, I don't know if you want to go into small caps and just look at how some of these charts are reacting to the big print.
Well, I think one of the main things I want to talk about is how different things are looking from today as opposed to yesterday. Because yesterday, if we look at something like this is the VanEck Semiconductor ETF right here. And let's pretend like we don't see this big red candle right here, which actually is getting bought back off those lows. Yesterday it was finally looking in the afternoon like this crazy parabolic trend was starting to get exhausted. And we've talked a lot over the past few weeks about how super strong the semiconductors have been and how overbought a lot of those stocks are, and how it's so tempting to want to try to play some downside action in these. And one of the things I cautioned against was trying to jump into something like this early because overbought overbought is bullish, and eventually these trends are going to have to correct a little bit, and I do think they're going to need to give back a portion of these gains that have been posted over the past couple months. Regardless, you really can't bet against strength like this. If you tried to bet against them on the way up right here on these big gaps higher, you would have gotten chewed apart. Even on this little downdraft right here, that wasn't enough to really to stop the train. This thing has just been moving straight up, and then we finally got what looked like to be a flame out right here with SMH pushing up toward these new highs here near 207, and then barely closing red on the top of its range right there. And I was thinking last night, okay, if we get some confirmation here that these stocks, maybe gap lower and open a little bit in the red, that maybe this is over, at least for the time being, and it's safe to try to, maybe take a small bet on some downside action on the semiconductors. That would be interesting. However, with everything that's gone on around it since then, I'm not too sure I'd want to jump into something like that just yet, just because of how quickly everyone has reversed the trades that were working so well yesterday. My thought was the hot money would ideally come out of your overbought mag sevens, your overbought semis like this, and then it would flow into some other areas of the market that were starting to poke their heads out. And one of those is small caps. If we look at IWM here, that's the Russell 2000 ETF. Up until yesterday, it looked like we were undergoing a powerful reversal to the upside right here. We talked a lot about how strong the Russell 2000 had been after faking out a big breakdown right here at the end of October, early November. Small cap stocks, they were garbage. Nobody wanted them. They did not participate in the 2023 reversal and move higher that the broad market did at all. Yes, they had some rallies. They could never get over the hump, never even approached 200 here back in February of 2023, roundly rejected and got taken down toward their lows. And once again, it happened back in August. And then we had the fake move lower right here, and it took off, outperforming large caps by a mile right here with the breakout above 200. And then, what happened on New Year's. All of these trades needed to consolidate. These small stocks, growth stocks, all that stuff. I put them in the same basket. They all needed to consolidate right here. And then last week, Thursday, Friday, it started moving in the right direction. And these really started picking up steam. We had a nice little higher low right here that was confirmed with this move higher. We saw it take out 200 again. And I have this line drawn back here. And again, these lines aren't magical, as you can see, crossed above here and then retreated back into its range, attempted it again. And now after CPI today, down about 3%. We'll see how it finishes the day. It is kind of clawing back some of those losses right there, but we're back in the chop. And that's the big issue here. It looks like you're going to get a clean breakout here. If you're being more prudent, you're not jumping on these moves as they're happening. You're waiting for some confirmation the next day, the day after, and you're waiting to see like, okay, are we going to retrace back down here toward 200 before we try to push higher? Is it going to try to take out those late December highs near 205? How is this breakout going to look? Well, it didn't break out at all. It pokes its head above the line there, and now it's back under 200 again. This might just need to continue to chop. This might be an issue where the market got a little too far ahead of itself. Everyone was really just sort of in a hopeful mood, and they had that hopium, and they were saying, okay, maybe we're going to get a nice not a CPI beat, but the opposite. Maybe we're going to have some light inflation on our hands, and that's going to tip the Fed's hand, and it's going to help these stocks along, and it's going to help people pile into these trends. No, it didn't happen. And so now, we're back in the chop. And I would consider this whole area right here that we've had since late December to be pretty choppy. I do think that small caps are going to eventually attempt to catch back up. because they are still running way behind large caps due to the fact that they didn't really participate back in 2023. They're going to close the gap. It's just a matter of when now. Are we just going to have to endure more chop along the way? I think that's entirely possible. But for trading purposes, for shorter term trading purposes, when you see charts like this and you have these moves that you're looking for some confirmation and then you don't get them and then they just nosedive right back into there, that can lead to just super frustrating conditions right there, because you're in a situation here where, there's really not an action you can take on small caps right now. You could make a guess as to what direction these things are going to move, and you could still get it wrong, because you could just get some sideways chop that just leaves you with capital sitting out there in the market that's not doing anything for you. So that's kind of the situation we're at in a lot of these stocks. And I would put, the ARC names in kind of the same boat right now. Different chart, but kind of the same idea, where a lot of these stocks that were unloved and a lot of these stocks that just got slammed last summer into Q4 before the big melt-up rally, those picked up steam, made it to the end of December, and then everybody dumped out of them, and it looked like they were building back up. I mean, ARC was on a nice 5-day run right there. After Monday, nice big candle on Monday, up 2.25%. Looked like they were poking their head above 50. 50 is kind of the round number that everybody's watching. If you can see back here, 50 is where it stalled out back in July of 2023. And then today, all the high beta, all the growth stuff getting slammed, and people were bidding these stocks up. I mean, I was talking about that a lot at the trading desk late last week and early this week. There's a lot of the good ARCs, these stocks where that aren't Zooms, that are actually like moving higher right now. A lot of the Cathie Wood stocks that it looked like they were some legitimate breakouts. The only issue is a lot of them reporting earnings today after the bell or Thursday. And so people are, hopping in front of huge earnings. I would consider it pretty big potential trend breakers here. People are jumping in front of these earnings to buy stocks like Roku, or here's another one. Here's Path right here. I mean, they're reporting earnings a little bit later, but you can see here the big moves that some of these top 10 ARC holdings have posted over the past week, and they're just getting obliterated right now. So anybody that attempted to buy some of these breakouts that didn't sell right away, I mean, you're sitting on losses probably. If you waited for some confirmation here, waited for it to creep higher above those late December highs in your 2650 or so, I mean, you're already down 5%, if it's a pure stock play like that. And so, there's some slack in this chart. It's starting to look sloppy right here. I don't think these are just going to magically resolve higher. We're just gonna have to wait and see.
Yeah. What if we switch a little bit of gears on a day like today? I'm sure you've got some take on this, and looking for anything that's constructive, like potentially some stuff that started red and is now moving to green, or just stuff that's in the green. Do you want to pull up how you would look at that?
Yeah, so on a day like today, that's what I like to do. I like to get down in the mud and figure out what stocks are giving those signals that, like, hey, maybe things aren't so bad for this group compared to the rest of the market. Like I said, I do think we're seeing like some snap rotation back into the stuff that was working earlier, because it's kind of like almost like a flight to safety. I know that sounds crazy that it's like a flight to safety would be in the video, stock that's been up so much, but that's exactly what we're seeing. You can see here how, and like, man, barely a red candle in sight for this. I mean, this is an obscene chart. This is not something I would buy right here, just to be perfectly clear. But we have a situation where it did open lower, down closer towards 700, and now it has pushed back above yesterday's close, and it's up like 1.5% on the day. I do think this trend is getting a little bit tired, but at the same time, this is the mindset of the market right now. This is the folks who maybe tried to hop on a trade like Path and were like, man, this isn't working, and then they jump back into NVIDIA or try to push it higher. I do think there's too much froth in this to jump on it, but at the same time, we're seeing some stuff start to catch and post moves like this. Again, not to the degree, this is a unique situation where we have kind of a mania happening. Maybe it's not a mini mania. Maybe this is a full-blown mania in these semiconductors right now. I don't really know how we want to label it at the moment, but there are trades where people are jumping in, and they're trying to catch these stocks that they perceive to have some value. They're down 6-7%, and they're pushing them up toward break even right now. And I just run these little screens at 10:55 right before we went on. I just ran a quick screen, which was large caps, and I just sorted them by performance. And just to see like what was going green and what type of stocks were moving. You see some industrials, some tech in there, possibly some earnings moves, but there is some stuff that's green. And if we move down this list a little bit, there were about 80 out of 800 of these that were green earlier. I wonder if that number has gone up a little bit. Yeah, it's gone up a little bit. We're at about 90 stocks are break even or higher. These are all large caps or bigger right here. So we do have some stuff that's starting to move in the right direction, is starting to, take some slack out of those charts. Those are the names that I would want to pay attention to potentially on the long side. These are the stocks that have the opportunity to kind of shake off some of this negative reaction right here and really move higher. I don't think there's going to be many. I don't think we're just going to have like a smorgasbord of like, really great red to green names to pick from today. I think a lot of these charts still might be kind of broken, but we can sort through the rubble of this and find out where that money is moving to and where the money's trying to hide out during a move like this. And, maybe try to gauge like just how big a reversal we're dealing with here off this data. Because again, this could be just another, kind of like gut check reaction to the market because it's not happy and is posting a little bit of a temper tantrum today, and then tries to get its act back together a little bit later in the session. And maybe the losses don't look so bad by the end of the day. We're just going to have to sort of wait and see at this point. Matt, I was talking with you earlier about how like, all of this fixation on rates in the Fed, it's really kind of put a blindfold on the markets. We always talk about how the markets are forward looking. And now it feels like with everything being so data dependent, it's week after week, we sort of almost have to do a full sentiment reset with like how the market's really feeling about its prospects over the next several months. So I think that's kind of a unique situation that we've been in over the past couple of years. And obviously, judging by the CPI reaction right here, that's not really changing. I don't think it's going to change until we get that first cut, whenever that happens, and maybe that kind of eases some of the pressure off of like what expectations are going to be going forward. But until we see that, I really think we're going to be kind of on a week-to-week basis about like how the market feels about what the next 6 to 9 months are going to look like, and that's just the environment we're going to have to deal with for the time being.
Yeah, and again, take this with a grain of salt, but if you look on, Market Watch or whatever, there was an article that posted yesterday or whatever, and it's like, the headline something like, "Will there be another rate hike this year?" So not even talking rate cut, they were starting to say, "What if there's another rate hike?" So that kind of thing can throw the market in a tizzy, and again, we might have to be in a little bit of wait and see mode where all eyes have to go back on the Fed and listen to every little word that Jay Powell says at the press conference in March. We know at this point he's not going to cut rates. We don't think. It's a very small chance.
Yeah.
But they're back in control. Whereas starting whenever last year, definitely November, but it seemed like the market started taking a little control. Like, hey, he's easing off, so let's start getting into for more of a regular market look. Yeah, let's you got the dollar up. We might as well hit that. I think we saw Scott wrote that in the comments as well. Uptrend in the dollar continues. Another strong day today.
Yeah. I mean, this is one of the main, charts that you can look at and say like, okay, this move in the market makes a lot of sense now because we have a situation here where the dollar is breaking higher again, breaking toward 105. Last week and early this week, it was consolidating there, below 104, or just above 104, excuse me. And then today we have yields and the dollar pushing higher. And obviously that's a huge drag on risk assets. And we can see it here. I mean, look at gold here. I mean, gold's getting slammed today, and it's been looking, kind of weaker and weaker as we kind of push forward deeper into the first quarter right here. I still like gold longer term, but everything that's happened since that kind of almost that blow off top that we saw here, that kind of like that wild chase above 2100 back in
Yeah.
December, that's kind of led to this reset, and that's what happens and I think this is a good example of, it's obviously not as extreme because this is gold. It doesn't have the big moves that something like semiconductors do, but you see these blow off moves like this one right here. It doesn't necessarily mean that you're going to go straight down, but this is a situation where this is going to need to reset. And we don't know how long that reset is going to take. Is it going to take days? Is it going to take weeks? Is it going to take months? Eventually we're going to have a situation like that with these semiconductor stocks where they're going to need to cool off, reset, and retrace. I don't think this is going to be a situation where when this is finished, at least in the short term, where this is just going to mark time sideways.
Yeah.
Big,
Could you go back to the gold chart just for a second? Because I think there's a lot of people, we get comments each week on gold too. But is there a point in which, because a lot of our analysts at Paradigm are positive on gold. We obviously know like the Jim Rickards camp just likes gold in general. But you like it from a little bit more of a timing spot here. But now with gold back below 2000, is there a point at which you would start to worry about it? Because right now you're still talking about like we need more time for a reset.
yeah.
What if it's not a reset and it's a breakdown? Where would that show up?
Um, well, I mean, I think it depends on your time frame. That's a tough question. Let's put it on a weekly chart just to show what we're dealing with right here. I would say that we're coming back into this range right here in the 1900s, following this move. And I wouldn't really get super worried about this unless we really start breaking down below the 1930s and below 19, and we really start approaching those October lows right there in the
Yeah.
mid 18s. I would say that like we're still doing okay as far as this is concerned. This chart, the more you go back and the longer term you look at this, and obviously like people that are interested in gold are usually looking at a much longer term time frame than a shorter term trader would. The longer you pull back and zoom out on a chart like this, the better it looks. I mean, yes, this is a setback for sure, and I'm not trying to sugarcoat that in any way. However, like none of this is really breaking this bigger trend right here, where we're seeing this massive handle and this even bigger cup and handle start to play out here. Gold entered what turned out to be a pretty long secular bear market in the early 20 teens and has been kind of stuck in that ever since. I think that we've been kind of in a herky-jerky start and stop situation where everybody's been sort of waiting for this next commodity super cycle to really kick into gear. And there's been all these other external forces on it, from COVID to rates and everything else that has piled on and sort of changed the focus of the markets since 2020, and has sort of delayed the coming of this new super cycle. Because going back to things I was saying about gold in the late teens, I felt that this was the big breakout, and this was the unofficial launch of a new commodities bull cycle here in mid 2019, when gold finally broke above 1400, because that was the completion of this big secular bear base right here in gold. And then we finally saw it take off. That was the big liftoff, in my opinion. And now we're in a spot where we're consolidating up near these former highs, just above these former highs from 2011, from that last blow off top in gold. So again, I would just say patience is warranted here. The miners don't look good. Silver doesn't look good. When we start to see those things shape up, and we begin to see gold once again start approaching those highs and start really building toward 2100, then we can start talking about like when the bigger breakout's going to be, and if we can get one of those big 6-7 month runs higher, which we were kind of anticipating earlier this year, that's gotten stomped on. We'll see if that actually happens. But until then, again, this is a wait and see. I wouldn't get too bearish. And again, I don't think there's any reason to get too bullish here. This is kind of a no touch for me. And we just have to sort of accept the fact that there's going to be periods of time where, we look at small caps, we look at gold, we look at some other charts, and there's really not a move to be made on the long or the short side. It's more of a hurry up and wait. What's the next pivot going to be? It just is a chart that needs more time. We can't force these trades. We can't force them based upon any type of external opinions we might have about the fundamentals or anything that's happening like that. Price will tell us when we need to act. And right now, price isn't telling me much of anything. Maybe short term, a little bit lower. Or maybe this is just a little bit of fear creeping in, and we'll see another one of those fake outs below 2000. It'll be up back above 2000 shortly, which we saw back here. I know you can't see it on the weekly, but you can see this lower shadow right here. I mean, gold was down in the 1970s as recently as 2 months ago in early December, after it came off of this blow off top above 2100. So, I mean, these things happen. This is an incomplete candle. We'll see what the future holds for it. But for right now, I would say like, this isn't something I want to get involved with in the short term. I want to see how it plays out.
Yeah. And I think that's something like we've got a bunch of people live on the Zoom call and live on YouTube right now. And I think that's something they appreciate about your style anyway. Because, from what I've been taught, right, number one lesson in trading is don't lose money. Try not to lose your money, capital or whatever. And the way that you're doing is very regimented. You're given what the market takes, taking what the market gives you rather. And in today's market, it's not given much. It's given a lot of mixed signals. So,
Well, right. I mean,
um,
it stinks being in a trade that's going south on you. But I mean, what's kind of equally as painful, maybe not to your wallet, but like what's equally as painful is if you get into something that just sort of doesn't do anything for you, and then you're sort of stuck. You're paralyzed by the fact that like, hey, I'm in this trade, my money's locked up in this trade, I'm down 3-4%, or I'm break even, and it's just not doing anything for me because it's in kind of no man's land. And so you have your finite capital, your limited money locked up in this play, and it's not working for you, and that money could be somewhere else and working for you. And that's why, relying on price could sort of take some of those concerns, or at least like limit some of those issues that you might have. I mean, we always get stuck in something, trading, investing, anything. You're not going to have 100% track record. You're going to get stuck in some dead money trades like that. But if you can limit those opportunities where you have dead money sitting there in the market, and make sure that you're in something that's moving, and knowing when you're wrong quickly, you'll begin to start seeing much more consistent results.
yeah. Okay, we just did a deep dive on gold, but you were back on the semiconductors. I don't know if you want to go into that or if we want to switch gears. We've got some other topics we can cover too.
Yeah, since we're talking about miners, let's talk about crypto miners, because I think this could be an interesting area of the market right now. And well, real quick before we go into those, let's look at Bitcoin, because Bitcoin's actually, on the move right here. And we've talked a lot over the past few weeks. If you guys out there have, been loyally listening every single Tuesday when we do these, but we've talked a lot about these crazy moves in Bitcoin and about the big fake out right before the ETF approval and how it shook out all the latecomers right there. And then we had the false breakdown, and of course it pulls back into the range. I don't know if these lines are still valid or accurate for anything that's happening in the market right now, because we do have a pretty substantial breakout where Bitcoin has just launched off the mid 42s right there, and it's attacked that round number of 50K. Last night, I was sitting around just sort of, I like to poke around and see what the financial media is writing about and seeing what the big topics of the day are from the non-trader world. And Bitcoin 50K was all over the place on the mainstream financial media. Everybody was talking about how that's the highest it's been since December of 2021, I think. Yeah, if we go back all the way back here, I mean, you can see this big bottom kind of forming right here, and it getting back over the hump of the high 40s, which was the pivot highs during when the market was melting down right there in spring of 2022. We're finally climbing back over that area right there. Hitting a little bit of round number resistance right here, which is fine because of everything else that's happening out there today. I don't think, Bitcoin being down, a grand from 50K right here is really that big of a deal for considering everything that's happened right here. I would expect it to kind of slow down in this area. So I think it's possible that we have a situation here where maybe the market is feeling a little bit of turmoil with CPI, and yet some hot money is still flowing into crypto. And maybe that's a possibility. Maybe that's some of the long side trades that are going to be working this week and into next week here if the market slows down. Even Ethereum is looking really good. We saw this big push higher yesterday, up 6% in Ethereum, trying to catch up to Bitcoin right there and attacking those January highs right there in the mid 2600s. I mean, these are some nice looking charts. And honestly, even if nothing was happening in the world today, if I could erase my mind and not know about the CPI stuff and not know what was happening in the stock market, I wouldn't be upset at all about a little bit of retracement here after such a big candle from Ethereum. So turning to the markets and the tradable stuff, what's happening with the crypto miners? What's happening with CleanSpark? Something like this. We have a situation here where this thing absolutely exploded higher. And this was a tough one. It's really disappointing to look at a chart like this that you weren't able to jump onto, because it's kind of an earnings pop right there. You see earnings right here, which were on Thursday, kind of getting in the way of this big move. I really wish that they could have taken this and moved it somewhere else. But you can see here the huge gaps. I mean, up 32%. following that earnings announcement right there. And then the next day up another 15. I mean, obviously massively overextended, huge move right there. But look at today where it was down to the low 14s and it's getting pushed back up here. This is only down like 2.5% on a day like today. I would say that's pretty darn bullish. Obviously, this is a wild chart. This is not your typical buy and hold type of stock right there. This is not a dividend payer. This is not an income producing stock. This is a tradable crypto miner right here that I look to try to squeeze short term gains out of the market. But you can see here just how quickly this thing can move. And this tells me a lot. We were talking earlier about like trying to find the stuff that's going red to green, the stuff that's going that's losing yesterday's lows and then pushing up toward yesterday's highs right there. I mean, that's a pretty darn good looking candle to me. I don't know if I want to hop on this thing right away, but at the same time, I think this looks pretty constructive. And I wouldn't be betting against crypto here, and I wouldn't be betting against the crypto miners here, despite this big move right here. I really want to see how this consolidates moving forward around this $15 mark on a stock like this. But that looks pretty darn good, and a lot of volume, obviously. Like I think we're starting to see the bullish rumbles of crypto possibly dragging us into the summertime. I know Fundamental Matt can tell us maybe about some of the stuff that's coming up in crypto.
I'm ready.
But yeah, like I like how the charts look right now, and if these can continue to look like this and consolidate, I think we're gonna get some good trades on the long side coming from them.
Yeah, and again, fundamentally speaking, shocker, I'm on this beat. You got to look at what's happening in the next few months. You'll realize quickly I'm not a crypto expert when I try to explain what's going to happen in Ethereum, but Ethereum has something happening. It's like a reset or something on March 13th. So there's something big happening there. And then Ethereum doesn't have its spot ETF yet. And that was a big news item for Bitcoin, although it was a sell the news. And then you've got the Bitcoin halving. That's coming up as well in May, I believe.
That's pretty soon. That's sooner than we think.
So all that stuff, that's going to start erasing people's mind of saying, oh, the CPI came in hot. They might just say, I think crypto could be making that run back to 70, or Bitcoin could be making that run back to 75, or Ethereum could be doing XYZ. So I think that's part of the narrative, and it's getting louder. The Bitcoin, altcoin, all that stuff. And again, rightfully so, because it's starting to really perk up. It's getting louder, and that narrative can start controlling, getting more people involved because the market's not been easy. And then all of a sudden you start looking at trades that are going up. You're like, I ought to move some money over there. Like if any of this stuff starts getting constructive, like the Marathon or Clean Spark, and then just so everybody knows, we talk about this every week, but I talked about it in the trading room chat last week. But I was a big holder of Marathon Digital, that Gunnar has up on the screen now. But it took me like 2 weeks, but I rotated out and went to Clean Spark. And again, part of that was some of the stuff that I saw in the trading desk chat room, which again, I appreciate that kind of stuff, but it's another narrative that like some of these Bitcoin miners are more efficient than the others. And when you get to the Bitcoin halving and all these things where it's like, then it becomes more difficult to mine, maybe that efficiency starts playing a much bigger role. And that narrative starts saying, maybe Clean Spark is better than Marathon. And I know nothing deep down into the fundamental analysis of the mining operations of Bitcoin, but it was enough that on the charts, it looked like I should rotate, and it was a good move. In the last 2 weeks, you look at Clean Spark and Mara.
Well, yeah, I mean, and I don't think you'd even need to know that to say like Mara is still down here, well below its December highs, and then is it why do I always get
CLSK?
CLSK? Yeah.
Yep.
I don't like that. I want it to be a P. I got to petition them to do that. But you can see here we're above the December highs with Clean Spark. So I think it's after saying all that, I didn't know if we should get into that, but since you mentioned your holdings and all that, I think, can we officially say that like Mara's out, Clean Spark is in as far as our number one speculative Bitcoin miner now?
I mean, this happened relatively quickly. This happened relatively quickly, so it may change relatively quickly. But right now, 100% from my portfolio, I have zero Mara, and I have all that money moved into Clean Spark over the last 2 or 3 weeks. Again, both were going up, but Clean Spark was outperforming pretty handily.
Here's the bronze medal right here, Riot. Let's move down into slot number 3. for me. I don't even really look at this one as much
I
anymore
don't
because
either.
Mara took the baton from Riot, and now we have CleanSpark taking the baton from them. So I mean, this is just this is not fundamental. This is order of trading preference at this
Yeah,
point.
exactly.
So yeah, so CleanSpark, I think that's going to be my number one now. RIP Mara, we had a good run. But I want, and this is just a little insight into like, like constructing trades and all that. If I'm looking at something super speculative and I'm trying to develop a trade, obviously I won't get entries in whatever I'm getting, but I want to trade the best of whatever the group is, the one that's going to, I mean, sometimes you'll have opportunities to like post like catch up trades. And I'm not talking about like ketchup and mustard. I mean like catching up to like leaders. You'll see a leader get out of control, and then people will rotate into the laggards in the sector and try to push them higher. You can have trades like that, but for the most part, I want the number one stock in the group, the one that's going to move the most. They give me the biggest magnitude moves, and I think that's. I'm sorry, Mara, you've been
You've been
dethroned.
great.
I think CLSK is the way to go. So
Yeah. It's kind of like, and this is switching gears again, kind of back to gold and copper or whatever. But one of the trades that I see you put on a lot, I know you look at the stop, is it's a similar story. Like when you talk gold and copper, you look at Freeport,
yeah,
FCX, because
yeah,
FCX is a good trading stock. That's the one you want. If you want to play a move, you go into that one. That chart looks horrible. Like I'm not saying buy that one, clearly. But I'm saying that's the ticker. It has just treated us well over probably, like many years that if you want to play the upside of copper and gold, you it's an optionable, nice
yeah,
trading stock. It's the
yeah, and
same thing now with CleanSpark. Like if I want to trade Bitcoin, I am going to trade CleanSpark for the foreseeable future. It's the same thing. If I wanted to play the upside of copper and gold, I'd be on FCX.
And since you brought up FCX, just really quickly, just some more insight into like how this market is kind of fooling people at the moment. Um, this was a decent looking chart to me in the short term up until about a week ago. I mean, it was really building kind of nicely if we kind of take out. See, I'm trying to hide, kind of erase our minds of what's happened over the past week or so. But you could see it kind of. I mean, we had a higher low right here. We had earnings which were pretty well received, up 4%, and then it was really building up here above 40. It looked like it wanted to move toward the top of this range toward 43. I was kind of had one eye on it, right here, and it's gotten dragged down and everything else. So like I said, like it's just this is part of the chop, and we haven't talked about this yet today, but I think this is pretty important too, Matt. We are entering a weaker seasonal period for the markets. We're entering a seasonally weak period for the year. For any particular year, we're entering a seasonally weak period for an election year. So this is the time where typically, and I'm speaking just broadly, and there's no average years, I say that a lot, but you have some sort of fourth quarter melt up. The good vibes kind of continue through January, and then the weaker 6 months of the year begin in February. And that's when you see the market tend to stall out, tend to chop along. Maybe you get one of those typical pullbacks that you would see in the markets. That's where we're at right now. So I know we've been talking a lot about, the big reaction to CPI and how it is kind of, putting traders' minds into a blender right now with how much things how much expectations have changed. But in reality, we go back and we look at the S&P, which, obviously has been aided by just large cap strength, just pushing into February here. But we've had a pretty darn impressive move off of these October lows right here without a lot of give back right here. And now we're finally starting to see a little bit of a stall out. Are we going to finally see an actual pullback, an actual move down 6, 7, 10% from here, which, by the way, would still be perfectly normal? I know it's going to freak people out. Whenever that happens, especially since we've had some froth in the tech names and in semiconductors, people are going to get very angry and get very scared and think that the end is near if this market goes down 10% from here. However, if the market does go down 10% from here, that would be perfectly normal bull market behavior, and that would be literally nothing to write home about because it happens all the time. You're going to see a couple of 5, 10% pullbacks in any given year. That's just part of the fun. That is the price of admission to playing in the stock market. You're going to have stocks overshoot to the upside, and then people get scared, and they're going to, probably move a little bit lower than they should, and then you'll have the accumulators come back in and start buying them back up, and you'll still have that longer term trend. that goes from bottom left to top right. But in the moment, it's going to hurt. People are going to freak out, and you're going to see a lot of people saying, "This is it. This is the end. This is, everything that happened, in November, December, January. That was just a hiccup, and now we're going to move lower." I I really don't see that happening, especially after the strength we saw last year, coming off of such a rough, grinding bear market in 2022. I think we're going to be somewhere along. I would consider it somewhere along the path of, okay, we've had a big disbelief rally. Nobody was bullish back in October. I don't know if you can reset your brain, but I remember specifically talking to you, Matt, when we were in Vegas, at the Paradigm event, and I
Yep.
said, I feel more bearish now than I felt in a very long time. That probably means the market's going to rip in my face. And that's exactly what happened 1 month later. That's what tends to happen. And then people are very slow to change their minds about it. And so you had people bearish all the way up from those October lows. And now there's going to be kind of this, okay, we've gone up from here. Surely this can't continue. We're going to have a little bit of tug of war here, a little bit of a reset before we get the meat of the next move start to develop. So as far as like a market roadmap perspective, that's where my mind is at. So now we're in a period where I think it's time to start thinking tactically and saying, okay, what can we play to the downside in the short term if things really start to get a little bit, scary here, I guess, for the bull crowd. And on the other side of that coin, what's the stuff that we can play on the long side that's going to be defying gravity and still pushing higher? My short list right now is going to be, until we see some of these tech growth earnings, maybe people will get excited about that, but maybe crypto pushes higher and leaves the market behind right here, and we get sort of separation there. Maybe those are the longs that are really working from a trading perspective, and then maybe if we do see semiconductors really hit a rough patch here, maybe we can short some of the weaker ones, get some puts out there and sort of benefit from some of the downside. Or maybe we have a situation where, we see tech growth just totally start falling apart, and it's a SARC market, the anti-tech growth type of market. And we know how volatile those stocks can be. We saw, I think, and I own this name, so it's okay for me to talk trash about it. But we saw
Yeah,
what
and
happened.
I own Sark, by the way. That's going to confuse everyone. But that was like a sometimes you have to make sacrifices. That was the one. I owned Sark for the last like 2 weeks,
Right.
but like my clean spark and all these other things were going up. So I had Sark for it's still sitting in my account, but it's not.
Sometimes you need to do that. Sometimes you need to make little sacrifices to the market gods to get the market going in the other
Yeah,
direction.
that's what I did for everybody.
You have to present some cash for them to steal from you. But like you can see here, this is a perfect example of like a really choppy tech growth name here where people can't really decide where they stand on it. Back in the summer, in July, it was trading at $80, and then it was below 40 in October. So it got chopped in half, and then it went back up to $80, and now it's in the mid 60s right here. Very tradable name, obviously, and can produce very sharp moves in either direction right here. This is a situation where this really starts to break down right here. If it starts leaking toward the low 60s, maybe we get some movement. But there's other, like if we look at the ARC list of stuff, there's a lot of stuff that has earnings coming up. When are Roku's earnings? Because this is what everybody was buying last week. Thursday night, we have, after the bell, we have Roku earnings. Everybody was buying this stock up and pushing it back above those year-to-date highs right there, above 95, pushing it toward 100. Down 3% today. So is this going to be able to claw its way back up and drift higher toward earnings, or earnings going to be a dud? I don't know, but there's a bunch of these names that look like this. Think about what is it Twilio? Have they reported yet? So this was another one that we threw a bunch of lines on a few weeks ago that are just still stuck on there. But you can see how this is looking bearish. It's like it's unable to rally above those highs right here, and it seems to be sneaking back down to this high 60s level more often. And we had it fail to hold its gains yesterday, despite a pretty good day for these stocks. We have it clawing its way back from those lows at 68 today, but we have earnings Wednesday.
Yeah.
After the bell. That's a no touch for me. But I wouldn't be surprised if they don't, give out some really beautiful numbers that people like. if people can't see the light at the end of the tunnel, I wouldn't be surprised if this thing gapped down here into $60 or something like that. You know what I mean? Like uh, stuff like this. I mean, it could go either way. This is a binary event we're coming up to right here, but I think there's going to be some strong reactions to numbers. I don't think there's just going to be like Twilio open flat after reported earnings. I think it's going to be a big move one way or the other on a stock like this. This is a top 10 ARK holding as well. So we'll see how some of these earnings come up, but there's a lot like this. There's a long list of these tech growth names that are reporting this week. It's a big week for them now that we've seen some of the FANG Plus, Mag 7, whatever code name you want to throw on those stocks. A lot of those are reported. Now we're getting to the meat of the growth stock universe reporting earnings. So we'll see what some of those look like, but that could kind of set the tone for what happens in Cathie Woodland and some of these big movers right here. And again, that line's not perfect and it's not magical, but it does cause some problems when you see some of these names really push higher and then start to fall apart and then dive back into these ranges. It creates a lot of confusion in the market and it creates kind of an untradeable situation until you get some sort of resolution.
Looking at the chat here from the Zoom chat, it was way back earlier. Someone was asking just to take a look at XOM. So I don't know if we want to look at XOM or any energy stuff. And then the other thing I'm starting to see some chatter on is regional banks. So it looks like ITA. I'm not familiar with that ETF, but that or KRE. We could look at those things.
Yeah,
All right, so we got
KRE,
XOM up here.
That's regional banks.
Yeah.
Obviously, those are going to be a little more sensitive to some of the stuff that's happening right now and out in the world. Yeah, ExxonMobil, that could look a lot better. I guess there's some comfort in the fact that like this level right below 100 seems to matter. And I lost my line. There you go. And it did sneak back above that, but I would consider this like kind of a broken chart as well. Like I don't know what it's going to do. Right here, I would say like, it looked like we were going to get a bigger move higher off of that false breakdown right there. Like at the beginning of February, I would say like, and I think I might have mentioned this on a call with you, Matt, or I mentioned it at the trading desk or in something that I read where it looked like, okay, maybe energy has a good risk reward opportunity here, where you have a situation where everybody's sort of bearish on oil and it's bottoming out and a lot of these energy stocks are trying to move higher, but they've all hit the skids over the past week and they haven't been able to extend. So yeah, maybe that's just a top right there. I don't know. I see some comments about it in the chat, but
yeah.
I mean, as for right now, I wait and see. Like, I think that this could have some upside potential if it really rallies toward 106 and holds it. Maybe this is just a consolidation off of these lows. But if it starts leaking back toward this area again, maybe it really is going to break down. I don't really know. I mean, like crude has been interesting looking. I wouldn't say this looks super bearish because again, we've talked a lot about how like people are somebody's coming in down here and buying oil in the high 60s every time it gets down there, and it's been pushing off of that range. But again, it's just been super janky where it looked like it was going to go at the end of January and then it got slapped and now it's trying to claw its way back up here. So we only have it's like trading off like week by week. It's like, crude's down every single day this week and then crude's up every single day this next week. So it's a choppy mess. Right. It's looking pretty decent right here. It's interesting that oil is rallying right now in the face of a strong dollar. And I feel like, and this is very anecdotal, and maybe I'm just on my ear to the ground, but I feel like a lot of the Red Sea, Middle Eastern scare news has been kind of off the radar, pushed off the front page a little bit over the past week or two. And I don't know what that necessarily means for crude, but I feel like some of the headline risk has sort of been burned off. I don't know if you have an opinion on that, Matt, but that's just kind of how it feels like to me. Like I don't like dealing with external headline events when I'm trying to think about like what an asset is going to do. And that's been kind of a wrench in the gears for some time, just due to everything that's been going on in the Middle East lately. But hey, that's not new. So I mean that kind of clouds the thinking a little bit because you could have a really good idea and then the next day it's like, something happened, something major happened with the Red Sea or whatever else, and it changes the entire situation almost immediately. So there's that. And then somebody was asking about regional banks.
Yeah.
uh,
So what is it? Is it
IAT.
IAT? There's
Yeah.
IAT
So, I
and
mean,
then KRE.
this is a tough one too, because again, last week it felt like you were going to get that nice push off of these levels right here, where it's like, okay, regional banks really caught fire along with some of these other unloved names. And again, talk about something that didn't really participate in 2023. This is that little bank crisis we had here with Silicon Valley right here. It looks more than little on this chart.
Yeah.
So these names got obliterated back here a year ago during that. And then it looked finally like they were going to build off of those lows right there. Totally understandable for it to come back here and revisit this level. And then late last week, along with everything else, and notice these three big bars right there. It's the same three big bars we saw in small caps, the same ones we saw in ARK. Money was piling into those trends, and now it's resetting right down here, back around, you know, the 39 mark, which is those pivot highs from the summertime back there. I'd want to see a bounce off of here, you know, like show me
Yeah.
something.
Does KRE look the same as that?
Yeah, I think it's the same. If I had to venture a guess, it probably looks the same. Yeah, same
Yeah.
thing.
Yeah,
Same
exactly.
idea. A little different, same idea. But it's that same thing where, and then this undercut a little bit, but like, you know, like fell off a cliff at the beginning of February right there, you know, with you know, and again, rate sensitive stuff too. Like, excuse me, like, you know, I want to see more confirmation that this is a legit turn the corner bounce right here. It doesn't look like it just yet. It just looks
Yeah.
like more chop. So I mean that's the issue here. And again, so you got to kind of throw this thing into like the untradables
Yep.
bucket right
A
there.
lot of
We have a
things
question.
in that bucket these days.
But look how good AMD looks. Somebody just asked about AMD. Marianne just asked about AMD in the chat. And like, I mean, all things considered, you know, even after today, uh, you know, like still coiling, not dead yet, I would say, about all these semiconductor trends, which, you know, they're overextended, but nobody cares if they're going to keep buying. They're going to keep buying until they stop. And like the
Chips.
timing's the tricky part. And it's going to be, there's going to be an ugly red candle out there eventually, but it's going to have to, but the bears are going to have to be murdered one by one on the way up before that red candle's going to show up. That's the
Someone's gonna have to tell me because this is my fundamental analysis here. Someone's gonna have to tell me because at some point in time, NVIDIA's chip is a commodity, right? Same with all chips. It's
Mhm.
understandable that they're very expensive and they're being sold out, and then they can charge whatever they want for them. But like over time, that is a commodity that can be created. That is, I don't think they have anything that's like, I don't know. I could be just way off, but that just to me, that means there's a fuse lit on this thing being able to stay up where it is.
So you do
And it's
not
not, that's not
subscribe.
like a, oh, this is too value. It's just like, look at what they produce. This
So
isn't
you
a,
don't subscribe to the idea that NVIDIA should be worth this much more than Amazon or
no,
whatever it
no,
was.
you know this. We were writing about this yesterday. Like, NVIDIA should not be valued more than Amazon. Like, Amazon has all these different wins at its back, and NVIDIA, in my opinion, produces a chip, which is the best chip on the market, but it is not, there's not a moat that's so deep around it that it's crazy. Again, like people had the same comment about Apple. What was it in like 2013? They're like, Apple can't sell this many iPhones to whatever. That's a whole different story of saying this is a bubble and you got to get out because like they were disregarding that Apple has this powerful brand, whatever. NVIDIA, I don't think this is a brand. Again, so there's going to be
Yeah,
some people that
I don't
argue
know.
with
I
me,
mean, I think it's
but
definitely a
I don't
brand.
think it's a consumer brand. They just want the functionality of a chip that can be created and some other competition could come out or someone like we've got fabs that are in the market or like starting to get created. So in 2 years from now, if new fabs are available and they're high tech chips, like NVIDIA doesn't
Yeah.
have this magical moat. I
Yeah.
don't
Yeah. No, I hear what you're saying. I hear what you're saying. I think we will eventually hit that point. The question is just when. Is it going to be when NVIDIA is trading double what it's trading for right now? That's the big question. You know what I mean? It's pretty crazy.
yeah.
And just answer one more quick question, Chad. When I say a non-tradable situation, it means like I don't see an edge in that chart, upside or downside. Like I don't know as a trader, I'm like I put it in the too hard bucket and I move on to something else. That's showing me something clearer that's happening with price. That's all I'm saying when I'm saying I find it's untradeable at the moment. Like everything, you know, it'll get to a place eventually where I feel one way or another about it. But if something's stuck in some chop, I don't want to be involved in it. I don't want to be involved in something that's doing this. I want to be involved in something that's doing this or this. It's directional. So that's
Yeah.
just that. I mean, that's just like viewing the market through a trading lens. It's all that I'm doing there. So I mean, oh, we have we got ATOM earnings tonight too. Is that another biggie? Is this a chip? Is this a
I don't
chippy?
know what they are.
I think it's chips. Look at all this. Look at all these red E's. Not a great sign. We'll see. It's been trying to turn a corner. Maybe this will be like a, on got off the semi train. Yeah, Miles, I know.
Hey, look at that one ready though. The one ready was like a gigantic move upward.
Yeah, people didn't like that.
But,
It was not received positively by the market. There's on Semiconductor right there. ON on, whatever you call it.
that one's not. Yeah.
It got off, as Miles joked in the chat.
Yeah.
It got off the bus like right here. And then it was begging for change on the corner right around here.
Yeah.
Closed that earnings gap though, but it's still kind of a hot mess. And it had earnings and people were somewhat impressed enough to buy it right here, but it hasn't really gotten much traction. But again, like the NVIDIA stuff and all that, I mean, is this just another symptom of like the early innings of everybody sort of doesn't know what to do with the AI bubble? I think maybe that's the case. And it's very easy to extrapolate crazy ideas and crazy numbers. And, it's like, it's the same as it ever was. It rhymes with everything else in the past. It's like we didn't really know what the internet was or what we'd do with it in 1997. We don't really know what AI is or what we're going to do with it right now. I mean, there's experts that kind of understand it a little bit better than most of us, but the general public has to sort of wrap its mind around like what it will ultimately be. And our understanding of how we would use the internet in the mid 90s did not lead us to, this in your pocket, which is ultimately where it took us. And now we're in another leg of this journey where we have to sort of wrap our mind around what AI is going to be moving forward. And so like, you're going to get a lot of this. And this is AI, the stock, which has been, an amazing trading stock. But like, is this going to be, and I was having a conversation with somebody else about this the other week, is this going to be like a legit contender, or is this just going to be an interesting early hype cycle stock that turns into nothing and a zero or acquired or whatever else and doesn't pan out to be anything? We don't know yet. This was,
and I own some AI, the ticker AI that you've got up on the screen here too.
Yeah.
But again, that one's just a simple, like, I see the writing on the wall that a lot of the stuff, the newsletters that we sell at Paradigm are selling because of AI. That means there is mass market interest, people that want to know what to invest in and all this stuff. And when you get down to it, just don't see how there's going to be a stock way better than AI, the ticker. Let's be honest. But right now, like, I think this one's from my standpoint, why I'm putting money in it is like, I think it's a safe one to ride this wave up. It's just going to be one of the ones that goes.
It's definitely an early hype cycle stock. It has the right ticker, if anything else. So yeah, I mean, I get that. But again, we can also, I mean, we're talking about this in terms of like the AI revolution bubble, whatever you want to call it right now. I'm not saying, I don't say bubble is a negative thing, by the way, just FYI. But we're obviously in the early stages of whatever this is and whatever this is going to be. But then back to a more immediate, like what's happening right now, trading perspective on this, we have a situation where 24 was the floor for this thing, and it was pushing hard off of this. I mean, every day the past week, we've been kind of looking and saying like, hey, AI is moving higher. It was up 10% yesterday on nothing, and today it's kind of working its way off those lows. The only problem is this stupid pink E that's on my screen right here. It's got earnings next Wednesday. So, I mean, like, I don't want to get in front of that, but I mean, this could very well drift into earnings right there, just sort of drift higher on some expectation. If it clears 32, I don't know. I mean, this might turn around, and we've seen what this thing can do. I mean, in the early days of this, nobody wanted this stock in 2022. No one was looking twice at this thing. Then all of a sudden in 2023, AI becomes a thing. And this goes from $11 to $30, and then it goes back down to 17, and then it goes up to, close to 50. So, very tradable. I'll say that. And so I'm very interested to see like where this goes and what this means for kind of the rest of the market here. It's you know, like when I see people start to put money into things like this, that means like, okay, spec money's moving. What else is going to go up? How far is it going to go? You know, what kind of rally are we going to get off this? That's how your mind should be thinking about
Yeah.
these trends and when you should be jumping on to play them.
Yeah. So Gunnar, we're about out of time now. The only other thing I would ask you, and this is just off the cuff, is there any ticker that you like right now? Like if you had to buy a stock today, or I won't even force that, but like if is there something that's actually on your watch list that you're like, I've been watching this for a week and it still looks kind of decent? Or is today a very big reset?
No, I mean, like I think like, and since we've been talking, like the market's kind of leveled out a little bit here. I think it's going to take a couple days to really sort out, you know, like how the market truly feels about CPI and rate cut chances and all that stuff. You know, I mean, like
Yeah.
this is an emotional. I mean, it's been just a few hours, so this is an emotional period right now that we're still kind of sorting through. Um, I I like the idea of watching SMH for some type of actual, you know, exhaustion, a confirmed exhaustion move in semiconductors to play some downside action. I think it could be a good chance at some quick money. I have like short list of some stuff that I was watching. I haven't looked at some of the charts today, so we can look at them together. Um, let's see what some of these and see like, look, this is interesting to me. So here's Carvana, the stock that was a zero as recently as what? December of 22. Everybody thought this was going to go bankrupt. It was at $4 and now it's at $50. This still looks pretty darn constructive to me. Despite,
Yeah.
you know, this move lower right here. DKNG is interesting to me because, well, look at how it's fighting back to the top of that range right there. It's been a very popular stock, you know, since the start of the year. I like this because it seems to be shaking off any of the bad vibes from the other growthy stocks, you know, in the market. It's not really tech either. You know, it's a totally
No.
different trend, so it doesn't get bucketed along with that other stuff, and so it seems to have avoided some of the gnarlier moves lower and some of the chop. So I kind of like this because in a market like this, I want to see stuff that's like that's standing out and that's not doing what the typical stock is doing. Because if we do have a move lower or a choppy move lower, we're going to have a highly correlated market, meaning everything's going to be moving together. You know, in a bull market, you have stuff that does really well and stuff that does not so well and stuff that doesn't play along at all. So you have, you know, you have some separation. Correlations get tight when the market starts dropping because nobody wants anything. They just want out. You
Yeah.
know? So do we have some stuff that's going to buck the trend? Maybe this. I don't know. I don't see it setting up right now. And also the stupid pinky is their earnings on Thursday. No
Oof.
touch. So, but I am interested in kind of how the charts
That's a
set.
good way. If you like action, not you, and not anyone that wants to be safe with their money. But if you like action, the same week of the Super Bowl, decent charts that's bucking a trend. And again, you would just be taking a gamble on it. But it's interesting that earnings are right after the Super Bowl where they might be able to say something in the call just
Yeah.
to give a little hint at the action they saw.
And then airlines, jets, ETF. Looking pretty solid and actually holding above that mid 19 pivot right there and not down a lot today. I think what was it? Was it UAL or DAL had decent earnings?
Yeah, I'm not sure.
So yeah, that's not looking that great. But these are all kind of building, but Jets looks pretty decent. So maybe this is something. And again, I'm trying to find stuff that's not getting sucked into the vortex of this, of the haves and have-nots in the market, you know?
Yeah.
The high betas versus the semiconductors and, you know, all this bifurcated trade we're seeing right now.
Yeah.
Yeah, and Chris said XBI, the stock that has taunted me, or the group that has taunted me for months now. You know, it's funny, tried to play a move here and ended up taking a loss after it couldn't maintain this channel higher and then just went into chop mode. And then it looked like it was about to come out of it. But again, this is the same trade as anything else right now. Any of the high beta stuff, it's like, okay, Thursday, Friday, Monday, big moves higher, and then they got smacked and it's down 3% today. Can it recover and actually push? I think we're going to need a few days to sort that one out. So, I mean, this was looking constructive again. Now back in the pain zone. So we'll see.
Yeah.
But yeah, that's what we're looking at right now. I think some of these, on-off trades right here, we're just going to need to have a couple days and sort them out and see what happens. In the meantime, I'm trying to look at different corners of the market, gaming, gambling, aeroplanes, what have you, just to see if there's any other stuff that like can avoid, some of that junk, and then see what happens with semis. Are semis
Yeah.
going to, or are they just going to go higher forever? Yeah.
We shall see. All right. Well, Gunnar, on an interesting trading day, CPI is coming out. A lot of different trades heading into reversals, but some stuff looking a little bit constructive. We appreciate your takeaways, and we'll be able to tune back in next week. We'll see if you and the trading desk, if you guys put any action on any of those trades that you think could be setting up now. So thanks again for your time, and we'll see everyone else. Thanks for their time as well. We'll see you guys all next week for